What is going on, everybody? This is a recap for the DOTS bias trading indicator. I'm just going to get in it. This is a 1 minute chart of the NASDAQ micros. Today is Wednesday, August 27th, the doldrums of summer. Okay, so this is basically going to be a video of the one dot entry function and how just following your plan. Today is a small microcosm of how following your plan over time is positive expected value. So just getting right into it. So the market opens up, the dots are mixed. Ideally, I like to take setups when the dots are uniformly red or uniformly green. Obviously red for bearish, green for bullish. So a one dot entry function basically is an entry model where you, if the dots are all red, you sell the close of the 1 minute candle that lines up with all the first column of all red dots. So you can see right here, this would have been a stop out. I'm not sure what the ATR was, call it 25. So this would have been a stop out to start the day. You know, the first 20 minutes of market open, not ideal. But if you just trust the system, you follow your back testing, you see that the market flips to a bullish posture. So one dot entry function, you enter at the close of the 1 minute candle that lines up with the first column of all green dots. Target hit. So negative 1R plus 1R, you are net 0 on the day. And then you just wait for the dots to reset. Lunchtime, you wait for 1:30 for lunch to be over. You can see first column of all green dots after 1:30. Enter, targeting these highs, and there's a 1R, but even more than a 1R. So that's kind of a high level, just how you have one loser and two winners using just strictly the one dot entry function. If you don't know what that is, just go back. I've got like 100 videos in this YouTube that nobody watches. A lot of them, or many of them, just go over that one dot entry function, which I just shared just to show that over time, just a setup as simple as that is positive expectancy if you have the discipline to follow it and to stick with your risk. But I'm going to pair the dots, with NQ stats. So today was a good example of the noon curve, which basically it says that more often than not, if the low happens in the first half of the day, so call it 8 a.m. to noon, that I think there's like plus 70% chance that the high of the day will be made in the afternoon if you're anticipating the low was made in the first half. So basically, you get into lunch and you have this high is what's called the noon curve high. And what I like to do is pair the dots with noon curve. So you can see 1:30, this 50% level was holding, basically the low to high of the trading hour session at that point that happened over lunchtime. And you can see the dots flip green. You have a noon curve expectation. That's where the probabilities are. So you're buying the dots, targeting the high of the noon curve, and you can see that this setup ended up working. So I like using dots with confluences in my favor. So while I don't necessarily only trade a one dot entry function, I like using the dots with confluence. So if I can pair NQ stats noon curve or NQ stats initial balance with the dots, then I'm sitting pretty. Positive expected value. So 7-day free trial, link in the bio if you want to try the dots out. Some members in the room have been having pretty good success lately, which is awesome to see. Reach out to me with any questions. Code DOTS gets you 20% off any of the subscriptions, and reach out with any questions. Thanks.